Hello everyone, this is Jim from Auto Finance. Welcome back to our channel. We are with you on 10th of December on US CPI data day. Alright, today is the most important day for of the month. We can say that one. Last Friday we have received non-farm payroll data, and this Friday we are receiving US inflation rate data. The expected rate is right now is so high, and almost like the expected rate, if it's just like a realized like that, it's 6.8, and the highest number in 40 years. So the record 6.2 in the last 30 years will be passed by 6.8. The consensus right now is this. So how this is happening, because like the problem in the supply shortages and other things is not solved. A crisis bottlenecks in US economy is happening right now, and there is no solution right now for this. And yeah, for the short term we will see the consequences. Even Fed is saying that inflation is not transitory anymore, so we have to take further steps quickly to curb this inflation. All right, we will see like with this expectation of high inflation, then dollar index is just going high, because like the Fed is just like turning to hawkish speeches, and that is making dollar stronger. And interest rate hike planned in the third quarter of 2022 is just coming closer, coming prior to maybe first half of 2022 is even on the stake. We will see what will happen next week. There is a meeting in US. Fed officials will just gather, and then they will speak about the monetary policy of US. All right, this morning we have received some other news, and CPI in Japan has risen as well, and so they are so low. But right now they are having some inflation, and for many countries it's bad, but for Japan, a country who is dealing with deflation, so it's kind of good news. But still, they have a lot of debt, so they have to keep that debt without any problem with these low inflation rate. Otherwise they have to raise the interest rate as well, and with that high interest rate they cannot deal with that much debt, because right now more than their like more than double of their economy, there is a debt that is crazy. All right, we have received UK GDP data for third quarter, and expected was 1.3, and release data is 0.9. So as you can see here from the data, UK economy is not growing. There are a lot of problems with France, with after Brexit, with Europe, and supply shortages, and as well labor shortages. You remember a few months ago, maybe like 1 month ago, there were truck driver shortages, and they couldn't deliver gas from refineries to gas stations, so people had to wait in lines for a few hours to get some gasoline. Even there was a limit on that one, like 10 gallon or something like that maximum. But right now it's almost solved, but still this problem with UK government, and the COVID cases is not helping as well. They are opening and closing the economy. It's happening so fast, so people cannot make investment and plans for the future, as this COVID stuff in UK is not resolving. All right, let's start with our charts. The first chart of today this video is DAX index. Why DAX index? Because there are some news in DAX index. Daimler, one of the biggest company in the German market, right now split it by two. Like right now there is Daimler and Daimler Trucks. This is the parent company of Mercedes, and right now in Mercedes Group, they will produce Mercedes cars, passenger cars, and vans in Daimler, and in Daimler trucks. They will just produce bus and trucks in that company. It also like it will be in DAX next year, and the CEO of the Daimler Trucks has told like that, and they're expecting in the DAX index in the next months. All right, so DAX has risen so fast, tested all-time highs, and from that moment, with the rise in COVID cases, it has tested low levels. From this point, the easy concerns about the new variant and cases. So we have seen another rise in DAX, but right now, slight decline. It's on another support area, which is 15.566, and from this point we are seeing some return. This support level right now seems it's working, but there are a lot of risk in Germany related to China Evergrande. China is the biggest trade partner of Germany. So if there happens a slowdown in China, so exports to China from Germany will decline, and this will affect the market and also German economy. So this is really critical. Every Evergrande news is affecting DAX index. That's definitely important. You should watch that one. And so if you just see this trend, this rebound goes on, the first resistance will be 15,744 level, and from this level it can test or even it can go higher. But right now the COVID cases is not totally solved in Germany market. Just yesterday it was giving some hope, because normally they were reporting around like a 70,000 per day new cases. Yesterday they have reported only 16,16K reported, and new deaths was only 78. That was good, and I'm not expecting like this will just suddenly drop. It will be in a time, but any slowdown in these new cases will just affect the market in a positive way, and then it may try again 16K levels soon, because the money printed in the European area is not stopping. There will be a lot of more money, and then this money will be poured into German market. All right, let's look at our next chart.
You are ready to win with us. GAN Markets.
All right, our next chart is natural gas. Natural gas is trading flat these days. It's just like making some moves, but nothing that volatile these days. Actually, this is good for countries depending on these natural gas prices, but not good for traders. So compared to previous month, there was a lot of volatility in the market. It was going up and down. But these days, compared to these volatile period, and right now it's not moving. Let me just show you the recent months. You see how volatile in the market, but right now it's trading just flat and testing this level. Kind of is trying to make these place as their deep point. It's a high point actually for natural gas, but one of the top LNG producer in US, the CEO of that one, I don't remember like the company name, but he was saying that right now we have seen really low prices. He's mentioning about 2020 low prices in 2020 because of like a demand shock and demand loss shock. But right now we are getting to normal times, and everybody is switching from coal-fired plants to natural-fired plants in electricity generation. So the demand in natural gas will be higher and higher. That's why actually we see a lot of problems in Russia, between Russia and Germany. That's the problem in Europe as well. So natural gas is trying to make these levels to a 375 level as a deep point. So as a price stability for a long time may go like this. And if we don't see sudden declines, the first level to be tested will be $4. Compared to, let me just show you, compared to $6, $6.5 even, the price is right now more than 40% declined. So this is a good place. Actually, if you just check here, this is a good place for buy options. If you have enough free margin, you can just get into market and you can just wait for that one, because the demand for natural gas in coming days will increase because of the harsh winter in January and end of December, and then January generally is the most high demand in the most highest demand in natural gas happening there. We will see that one, but right now it's getting away from support level and getting closer to resistance area, but slowly it's happening. But it doesn't matter, like a contract size is really big, like in American FX broker companies, and so just one lot, it means 1,000 cubic meter of 10,000, sorry, cubic meter of natural gas. So $1 change makes $10,000. So it's a good money. All right, even if it just reads from 384, 85, let's say to that one, it make to reach this point in one lot, it makes $1,500. It's a good money. You can just take advantage of this opportunity. All right, this is a good place, as I said, if you have enough margin to buy natural gas. All right, let's look at our last chart. All right, our last chart is S&P 500 index. As you can see here, S&P has tried its all-time high levels, and from that level, it has been rejected. Like I said, like it's a trend because it was so close. So a rejection has happened in here. A lot of people are just expecting a correction. They don't count these Omicron related deep level, not a correction. So still expectation of these recent hike from this point to this one, at least like a 10-15% correction in the market being waited, and a lot of people just find these levels are so expensive in the market. We will see, in my opinion as well, there will be some correction, but not like a 10-15%. I don't expect that one, because the money like printed in the market is so much. So can you imagine like 50% of the total money circulated in the US economy has been printed in just 1-2 years, in the last 2 years. So this money will find itself in the indexes. There is no other way, because you cannot wait like take US bonds and then fixed income. Right now it's on negative territory, it's negative yields. So there is no other option spending your money in indices and forex market. That's why we see a lot of volatility, we see a lot of sell and buy options. But as I said, like it's still any news related to tapering next week will just make these prices really low, and from these points, current point, the sell option, from the point when it crashes, in a good buy, you can make money. Thank you so much for watching us. We will be together on more news this afternoon after US CPI data. Have a nice day. Bye.